So I firmly believe that the key to success when it comes to trading is how you manage your account. You can be the best trader, you can be the best analyst, but if you are horrible at managing your account, you will not see success at all when it comes to trading. In this post-market recap, I'm going to be explaining to you guys how we manage to stay consistent. One of the hardest things traders tend to do is that when they make a considerable gain, they put that back immediately in the market, not understanding the true risk of these options. Because as you have less time to maturity, the volatility goes up and so does the risk. So it's important that you understand that you don't need to always load higher into the next trade. And one of the biggest pitfalls of people once they make money is that if they have lost money in the past, they're always trying to make themselves get back to whole. You always have to assume that every trade is independent of each other and that you should always make decisions based off that rationale. We do a combination of both zero OTDs and swings, and I usually like to ensure that if worst case scenario happens with my swings, I need to know at the end of the day what I'm left with, so that way I can be profitable moving forward. So we're going to showcase you an example of the trades we've taken this month, how much we're up by, and how we're managing to do this moving forward. So here's an example of a spreadsheet that I use to help me manage my account. This spreadsheet is available to all members in our mentorship program, and I use this to communicate my trades to my members as well. So a couple of things here as well is that, you can rely on your broker statements if you wish, like looking at your P&L and stuff. But one thing that is a problem is that your P&L is constantly fluctuating depending on the swings you have. So that makes it a big problem. I like to journal these entries as well because it allows me to understand if that trade hit a certain threshold. In my room, I consider a good trade one that makes minimum 50%. And sometimes I may not even sell at 50%. Sometimes it may go higher. Truly depends on how much P&L I have for the month and for the week. And these decisions enforce what I do moving forward. If I believe there's an opportunity of the trade to go higher, then I will most certainly hold it. And depending on the situation, if I don't have a strong month, then I may focus less on the news-based plays and the high risk lottos, and mostly focus on making sure that I find those A+ setups. So a lot of the trades that you see right over here, they have hit my what I call my standard minimum, which is the 50% minimum target here. This month I managed to accumulate $27,000 in profits, and this is considering the fact that I have multiple swings that are still open this week. So these swings, I count them as a loss until they are sold. And that's going to be important because I need to know if these trades don't end up in my favor, what am I left with at the end of the day? And just relying on a broker is not good enough. Some trades, especially like this QQQ, which ran up, we had these QQQ puts that we call over here. This trade, for example, ran up more than 120%, and I still didn't sell it because I made a massive winner off here, and I believe that could have made more money. Our ISRG earnings lotto winner is what really drove our P&L this month here. But we've been very consistent with our SPXs as well. We managed to score another 500% on SPX, and just today we scored a beautiful Broadcom play and so forth just off Friday lottos as well. So you may look at this red trade and say, hey, we didn't make money, but they hit minimum 50%. I personally did not sell. If you're a small account that has had issues in the past, I always recommend that you constantly keep selling until you making profits. Like this week right here, we've been seeing so many green trades, and a lot of these trades did in fact hit my standard minimums, as you can see. So as long as we are staying profitable, and if I go take multiple trades and I see that I'm ended up with 20K worst case scenario, am I happy with that? If I'm not happy with that, then I will most likely take profit sooner rather than later to ensure that I stay up on top. So having the spreadsheet like this, knowing what you're left with if you take multiple swings and so forth, and when you take multiple trades, is also key. Another important thing that I do as well is that when I enter a trade log here, for example, I want to see, for example, what I'm going to be potentially earning if I have a target. So let's just say, for example, this NVDA swing that we decided to take at 1.8. If I think that they can go to $5, you know, we need to make sure the math is quick. Okay, and that's crucial because you know, when you're running too many calculations, it becomes difficult. So if I was to sell that at 5, that would mean I would earn $6,400 off this trade here, for example, right? So this gives me an idea on how to kind of play if I'm holding multiple swings and multiple position, which is very crucial to note here as well moving forward. So I hope this is very informative for you guys that are having issues with account management. You know, it's always important to indicate why you got into the trade in the first place, which I do over here. It's important to indicate what type of trade it was, and if it's closed, expired, and so forth, right? So very important to do all this stuff if you want to become better at managing your account. So let's now look into the charts and see how the results have been doing overall. Okay, before I explain the before and the after of our chart setup to help us earn a lot and become successful, is I first want to go over the massive wins that the room has been experiencing. Not only have the members in the room, but we've been consistently calling out banger trades in the free Discord here. You know, tons of gains, tons of P&L in our Discord here, and it all comes down to our analysis that we do over here. Okay, so the first thing is that every week before the start of the week, we basically come up with an idea about what market we are dealing with here. Okay, so initially you can see right over here that our SPX analysis that we have determined was that the S&P 500 estimated weekly high that we called out was at 6,800. You can see that this was given on October 18th, which was on a Saturday, and we gave all these key levels as well. This map also indicates to us exactly where the breakout ranges were, so we knew exactly where SPX would be strong, where the chop ranges would be, and that's going to be crucial for traders that want to learn how exactly this is going to work. You can see here as well, this is where the market opened, right exactly right over here, and at this point we've seen that the market pretty much had a low at around 65.55 as well, and it topped off at our estimated weekly high once the CPI report came out as well. We spoke about the main catalysts, you know, about Tesla earnings and so forth, and how that was going to impact the market, you know, Netflix earnings and all that stuff. The next chart that we provided is QQQ. So going over QQQ here, we can see this is where the start of the week was. The QQQ pretty much stopped at our bottom neutral range, right, that you can see right over here at 600, and this was a strong support that led it to go beyond our level 2, and you know, by Friday pretty much stopped there. You know, it stopped at on top of our bullish breakout zone right over there. Okay, so interesting to see that set up. Our next chart here, of course, is IWM. So IWM top was exactly at around 251. You can see right over here, this blue line is the start of the week. So it managed to stop at that key inflection point right over there. So having this level, very, very crucial and very helpful as well. Another thing that we have been using as well is analyzing SMH, which is a semiconductor ETF. I'm still trying to figure out the process on how to analyze these premiums, but you know, it's good to see if this index is strong or weak, because it allows me to figure out if the semiconductors are playable or not. When we have this bullish breakout zone on SMH, for example, that gives me confidence that playing something like Broadcom on a Friday might be very useful moving forward. So we do like to see this chart. The numbers were a little bit off. It did stop at my level 2, which confirms the trend, and then buying the dip on the semis was where it is was at. And one play that was responsible for giving us a massive short winner on Bitcoin related stuff is that we called the top on this BitX, right? So This is our last chart on our index market analysis. So we divided the channels here, all our market indexes. So this Bitcoin basically stopped at 54. I took a short here. I sold it at 51, but I told members that this could be a banger trade. I decided to only sell that because I decided to take ISRG calls instead, and I didn't want to lose that double I had on this BitX. But you know, if we did hold that, that would have been a 400 to 500% play here. So very nice to see that we called the top on this BitX, which has been very helpful in me calculating when to short Bitcoin or when to go long in this particular situation. Now going into my semiconductor charting analysis here. So NVIDIA had a wide range today, this week, and pretty much it bounced relatively close to my level 1 bearish. At first it was holding, but then semiconductors started to really drop here. This 175 is where we were actually aiming here, but you know, NVIDIA had a very chop range, so not much to this chart analysis overall. Our next chart here is AMD. So AMD basically stopped exactly at our 252 on level 2 bullish over here. It was close to the breakout, managed to stay on top. This level 1 bullish zone was a tough inflection point, but it managed to go. So that was nice to see that as an idea. You know, the trend got confirmed for the upside there. Broadcom, we got a nice winner off this simply because this here hit our level 1 bearish right on the money. As you guys can see, right over here, 336. So that was a key inflection point that caused this to pretty much rip. And that was the best entry for the stock here. When it hits level 1, that's when they put premiums are expensive, especially if it happens early on in the week. We usually like to buy calls at that particular instance. So on to the next chart, which is ASML. So usually when we hit our level 1 bullish inflection point on a Monday, I usually like to, you know, at this particular point, set up a short. So this happened on a Monday, literally at my 1051. You can see right over here, and it rejected. Eventually it hit my level 1 bearish at 998, and it bounced exactly off that number. This is pinpoint accuracy, you guys can see here. Okay, so this is another example of amazing setup trade, and you can see the numbers right over there here as well. On to the next chart here now is LRCX. So LRCX had earnings this week, right? And you know, earnings, analyzing premiums on earnings can be a little bit difficult here, but in this case over here, we've seen LRCX pretty much bottom at my neutral range here at 138 and broke above this level 2 zone right over here. So nothing really important about this chart overall. So this MU right over here, anytime I see that it manages to get to close to level 2, I usually like to wait for a significant dip in order to get in and try to get the 215 calls at some within the day's range. So this, for example, here we've seen, you know, a big pullback here at that near that level 2, and it manages to really break out of this level 1 and eventually go above and beyond that point as well. So nice setup there. So another example here for SMCI, hit our level 1 bullish just right, level 2 bullish right over here. This stock actually was initially strong, but then it had a significant pullback, and the reason is this level 2 doesn't work when there's news. So the reason why it started to really crater and it went closer to level 1 was because they pre-announced their earnings, which gave a little bit of major weakness in this stock itself. So that's why it started to drop. So another helpful thing is that, you know, ARM had a very nice week last week, but I told my team just avoid this for now because the premiums were expensive and it wasn't hitting any inflection point. So when something's not hitting the inflection point after having a massive week prior weeks, you just want to kind of avoid it. It's just been pretty much in our chop range. This is how we kind of avoid these stuff. When it starts hitting my inflection point, that's when I know there's a potential trade setup either direction. Now that's the end of the semiconductor list. So this is our tech list right here. So this one here, Meta, wasn't really much movement here. Initially kept rejecting my 737 here, right on the money here. So all these charts are always given in advance, and there's no edits that we do on this as well. But we talk about the implied volatility and all that stuff, and that you know, most likely it wasn't going to move that much, but it did kind of somewhat break up above my bullish breakout zone. So we were looking at that. Oracle was another interesting play here that you know, hit a lot of my inflection points. We see that Oracle, for example, hit my level 1, bounced off that initially, went to 280, seen some major weakness, and broke down slightly over here. Didn't get the full breakout to my estimated weekly low. If it had hit my estimated weekly low, I probably would have bought some calls and equities at that particular zone right there. So that was an interesting thing. Apple here as well, pretty much ended up moving towards my start to move above my estimated weekly high after bouncing off my level 1. So anytime I see a strong stock like this, and I believe there's a key support, that level 1 bullish 256 is usually a sign. You know, we called out this trade as well, and usually when it rips out above 256 in the bullish breakout zone, you definitely don't want to miss it moving forward. Going into Tesla, so you can definitely see the accuracy in these levels, as Tesla stopped exactly at my level 1 bullish at 448, right on the money on this Monday here, and it rejected multiple times, even on the Friday there. Its earnings wasn't so impressive in my opinion. No real stuff going on for the stock. So that's what's happened in our channel this week. We managed to score massive bangers in the room, and we hope to teach you guys in the future here. So we'll be showcasing our charts in all our post-market recap, giving you guys ideas and setups that we're going to be looking at moving forward. So keep an eye out for more content. You definitely don't want to miss it out. And besides all that, we'll see you guys on the inside. And like always, let's get that money.